Hello guys, welcome back to new video. In this video, we will be going to see fundamental analysis of a monopoly stock in chemical industry with the cheapest P, which is Archean Chemical Limited. So let's start with the video. Let's start with about the company, what the company do and in what business Archean Chemical is in. Archean Chemical Industries is in the business of bromine and industrial salt, which is used in various industries like food, oil and gas, pharma, etc. Company is the largest exporter of bromine and industrial salt in whole India. ACI is the leading specialty marine chemical manufacturer in India, and company's main focus is on producing and exporting its material like bromine, industrial salt and sulfate of potash to customers around the world. The company is the largest exporter of products like bromine and industrial salt in India, and company has the lowest cost of production compared globally in both of its products like bromine and industrial salt. Along with this, ACI is the one and only manufacturer of SOP, which is sulfate of potash in India. Other than ACI, no one can produce or manufacture SOP in India. ACI has a production facility for all of its products in Hajipur, which is located in Gujarat, where it is in very close proximity to the captive Jakau jetty and Mundra port. Company's marine chemicals business is predominantly conducted on a business-to-business basis both in India and internationally. ACI has a very strong clientele base both in Indian market as well as in global market, where company has 27 global customers and 28 Indian domestic customers. So company has maintained balance in terms of customers. ACI has recently come with an IPO in month of November of FY23, and ACI raised around 1463 crores, of which 657 crore was OFS and 805 crore was fresh issue at a price of 407 rupees, where company got a very good response from the market that the issue was oversubscribed by 32 times, where QIB portion was subscribed at 48 times. Now coming to history of company. So company has a long history, where company was incorporated in 2003 as Archean Chemicals. Then in 2011, company entered in strategic investment with Sojitz Corporation, where they invested around 225 million Indian rupees in ACI. After that, in 2013, ACI started its operation of industrial salt and also started exporting its product globally in countries like Japan and South Korea. Then in the very next year, that is in 2014, company started production of bromine, and in the same year, company started exporting to China, where Archean Chemical has the largest market there only as of today. After that, in 2015, company commenced production of sulfate of potash, and then in same year, company started exporting to Belgium. So in 2018, ACI again entered into strategic investment of 8400 million rupees, which was invested by Indian Resurgence Fund. In 2021, company started its expansion with installation of bromine capacity to 28,500 metric tons, and they started exporting to Qatar. And in 2022, ACI was publicly listed on both BSE and NSE in month of November. Now what is the product portfolio of company? That is, what are the products that company sells and where they are used in. So ACI main business is in manufacturing and exporting its product like bromine, industrial salt and sulfate of potash. Now we will see that what are these products and which industries they are used in. So bromine is the first product of ACI, where Archean Chemical is leader in Indian bromine market, and company's main exporting market include China, and it has equal balance in India. So what is bromine? So bromine is a member of halogen family and is found naturally in seawater, underground brine deposits and other water reservoirs. Transportation of bromine is very dangerous as it should not be leaked in environment. So it requires nickel and lead lined ISO containers. For this, company has 228 containers, which include both owned and leased as of FY22. Bromine is a very important and a key product in industries like pharmaceuticals, agrochemicals, water treatment, flame retardant, additives, oil and gas and energy storage batteries. This image shows how the bromine has started its revenue in company's growth. So the revenue of bromine was at 225 crore rupees in FY19 and it stands at 708 crore, a total growth of 33% CAGR year over year, which is a huge growth, and in recent quarter of June, company already reported 133 crores in bromine. Now the next product of company is industrial salt. In this segment also, Archean Chemical is the largest exporter in Indian market with the export of 2.7 million metric tons in FY21. India's industrial salt is the important material in chlorine and caustic soda production and is widely used in chemical and food and beverage industry. Archean exports 100% of its industrial salt production to global companies mainly in Japan and China. Asia have one of the largest salt works in one single location in the world. Their industrial salt washing facility at Gujarat has 3 washeries, each having a capacity of 200 tons per hour, that is total capacity of 600 tons per hour. This is made using the solar evaporation method. Totally there are 14,000 uses of this salt, like it is a source of sodium and chlorine, which are basic components of an array of materials such as plastic, glass, synthetic rubber, cleansers, pesticides, paints, adhesives, fertilizers, etc. This image shows the revenue contribution of industrial salt to ACI. So the revenue of industrial salt stands at 299 crores in FY19 and is also has zoomed to 728 crores, that is, it is given a 25% CAGR growth and is already has done a revenue of 198 crores in the first quarter of FY24. The next product is sulfate of potash, that is SOP, which has similar revenue contribution for company. SOP, also known as potassium sulfate, is a high-end specialty fertilizer for chlorine-sensitive crops and also has medical uses to reduce the plasma concentration of potassium when hypokalemia occurs. Archean is the one and only manufacturer of sulfate of potash from natural sea brine in India. This is used in industries such as agrochemical, medical uses, and various industries include glass, cosmetics, etc. The bar graph shows the contribution of SOP in Archean Chemicals revenue. So we can see that the revenue is continuously dropping for SOP as company is more focusing towards bromine and salt, but it has shown growth in FY24 first quarter where company has reported 50% of FY23's revenue in single quarter only. Here we will see the revenue breakup and the geographical locations of Archean company. So the revenue contribution of bromine stands at 708 crores for FY23 and is clearly same that 728 crores for industrial salt. As we know that Archean Chemical is the global exporter of its product where one of its product is only sold globally. So it comes with a revenue contribution of 33% from India and 67% from the global export. So from the image, we can see that company has a total of 55 clients where 27 are global companies and 28 are domestic companies. Here the revenue contribution from company where top 10 contributes for 64% and the top 20 companies contributes for 81% of the revenue. Remaining contributes for 20% of total company revenue. Now coming to the product-wise revenue for ACI. So marine chemical salt contributes for 45.37% of revenue, which was 49% in FY21. Similarly, bromine contributes for 53% of revenue, which was 46% in FY21. And the SOP contributes to 1%, which was nearly 0% in FY21. Now the installation capacity of company product, which are in Gujarat. So bromine has 28,500 metric tons per annum capacity, whereas industrial salt has a capacity of 3 million metric tons and SOP has a capacity of 130,000 MTPA. Coming to promoters of company, an important aspect of fundamental analysis. Mr. Ranjit Pendurthi is MD of the company who has joined the company in 2002 after completing his studies in the US. His focus was mainly inclined toward BD of marine-based chemicals in India. He holds a degree of Masters of Business Administration from University of Chicago, Illinois, USA. He has 22 years of experience in the chemical business. He has been associated with the company since its incorporation. Now, Mr. S. Meenakshi Sundaram is a non-executive, non-independent director of the company. He has been associated with the company since its incorporation. He is admitted as an associate and fellow member of the Institute of CA of India and holds a degree of Bachelor of Commerce from University of Madras. He has approximately 4 decades of experience in accounting, finance, and tax relations. He does not hold any shares in the company and there is no inter-AC transfer among other directors of the company. Now coming to the growth outlook of the company, what are the future growth triggers for the company? So management of ACI expect a steady quarter as the industry is reviving. Management has also said that domestic market for bromine remains steady and the demand for industrial salt continues to be robust. Company said that there are growth opportunities in the bromine derivatives that are some of the byproducts of bromine. Company has already started marketing its bromine derivatives and also received a positive feedback from its customers so that company can bet big on bromine derivatives. Company aims to achieve utilization rate of around 70% in the first year of the bromine derivative project. Company said that there will be clear picture in terms of SOP segment in month of September. Management has implemented some of the cost reduction measures that help the company in saving raw material transportation and power and fuel cost, which in future will help the company to sustain its high margin business. Management has said that they have a margin target in range of 37% to 42%, of which they are in upper band segment. Management of company is optimistic about the future and they wanted long-term sustainable growth and are focusing on the same. Now coming to the particular product growth of the company, for which starting with the bromine product market growth. As the image shows, the total market for bromine, which stands at $2.86 billion in 2017, has shown a slow growth of $10 million to $2.96 billion. Still in that 3 years, Asia has a CAGR of 32%. And in the next 5 years, market is expected to grow more than $1 billion to $3.92 billion in 2025. So just imagine how much ACI can show growth in next 2 to 3 years. So the next is industrial salt, where there was opportunity of 137 million metric tons in 2017 and it has dropped at nearly to 157 million metric tons in 2020. But this market is reviving and Asia is the largest producer of this in India. And the industrial salt is expected to grow at 185 million metric tons till 2025. Now the SOP market has also shown a very steady growth from 5.55 to 6.50 million metric tons. And company was reducing its interest in this market. But now management has already said that there will be more clear picture for this segment for ACI in September quarter and the market is expected to reach at 8.7 million metric tons till 2025. So company is also deciding its brownfield and greenfield expansion, of which in brownfield expansion in bromine segment, company has added a feed enrichment section at the site in Hajipur, Gujarat, which increased its bromine capacity by 18,000 metric tons per annum. And they have also added an additional 14,500 metric ton per annum capacity in FY23, which will be used for producing bromine derivatives in the upcoming greenfield project. So in salt segment, company has an intention to expand the manufacturing capacities for industrial salt production by adding one additional washery up to 50 tons per hour. Now in greenfield expansion, company is expanding in bromine derivative segment, where Asia have set up a new facility at Jagadia GIDC through Archean Chemical Private Limited, which is a subsidiary to ACI to manufacture bromine performance derivative. In addition to this, company is doing a capex of 2,580 million rupees for 3 of its bromine derivatives. So here we will understand what is this product and where will be it used and what are the opportunities for this. So the products are, first is high-end flame retardant with 10,000 MTPA capacity. So globally there are properties worth billions of dollars are lost due to fire-related accident every year. This makes anti-inflammatory agents or flame retardant crucial chemicals. The starting of the flame retardant facility is expected in Q1 FY25. This product is also used in industries such as electronic industry, wire and cable compound, and in everyday commodities such as rubber, etc. And as the image shows, the market of this high-end flame retardant is expected to grow at a rate of 11% CAGR for next 2 to 3 years at $1,843 million. Second one is clear brine fluid, which comes with a capacity of 13,000 mtpa. This is a chemical compound used with additive in well completion operation to make the solid free from brines. These fluids are extensively used in the oil and gas well drilling industry. These are used to produce calcium bromide, which is used in oil drilling and organic synthetic and flow batteries. The image shows that the clear brine market is expected to grow at a 3.6% CAGR at $1,236 million. The third derivative is pure terephthalic acid (PTA) synthesis, which has a capacity of 5,000 mtpa, which is primarily used to produce polyester. A majority of PTA is consumed in the development of polyester resins, such as polyester films, polyester fiber, yarn, and PET material bottles. So this is connected to our previous research of Polyplex Corporation. Those who have not seen that video link will be in description. Brominated catalyst is used for production of PTA. The main use of this is polyester resin such as polyester film, polyester fiber and yarn and PET material bottles. So the image shows that PTA industry is expected to grow at a rate of 6.6% CAGR with an expected market size of $437 million in 2025. Now coming to the rating of the company. CRISIL has rated the company at A- and the outlook kept by CRISIL is stable. CRISIL has termed this stable outlook by saying that Archean Chemicals Limited business risk profile to remain steady over the medium term, supported by established market position in bromine, healthy customer relationship, competitive cost production, healthy operating efficiency, and forward integration to bromine derivatives. The company is also expected to sustain its adequate financial risk profile, supported by healthy cash generation and prudent funding of capacity addition. Drivers for rating for ACI are market presence of company, which has monopoly in some segment, operating efficiency, which looks healthy for the company. Financial risk profile is also termed adequate by CRISIL. Volatility in the industry, climate conditions, and liquidity, which is rated strong for company by CRISIL. And CRISIL has termed some upward and downward factor. Upward factors such as steady revenue growth with improvement in product diversity and operating margin of over 30%, leading to better than anticipated cash generation. Sustenance of adequate financial risk profile and strong liquidity. Downward factors such as material moderation in realization of product, leading to significant revenue degrowth and decline in operating profitability below 15 to 18% on a sustained basis, also impacting cash generation. Higher than expected debt funded capex or acquisition, or any undue stretch in the working capital cycle, moderating debt metrics. Now coming to the financials of Archean Chemical Industries. So as we have seen earlier, Archean Chemicals is India's largest exporter of bromine and industrial salt. So now coming to the financials. Company has a market cap of around 6,836 crore rupees with a current price of 558 rupees. So company has earlier shown a high of 732 rupees and a low of 440 rupees. Currently stock is trading at a price to earning of 17.4 with a book value of 116 rupees and a dividend yield of 0.45%, which is lower. ROC of company is 45% and ROE is 44.9%, which looks great in terms of ROC as well as in ROE on the sustainable basis. Face value of company is 2 rupees. So company has given split earlier. Industry PE of company is 28.9, close to 29. So industry PE of chemical industry is much higher than the current stock PE of Archean Chemical Industries. Debt to equity is of 0.05, which is negligible. Reserves of company are 1408 crore, which are raised in the previous financial year. PEG ratio of company is 0.37, which shows that there is a huge growth potential in Archean Chemical Industries. Promoter holds nearly 53.6% of their holding, and the sales growth in the previous year was 4.06% and a profit growth was of 54%. So why the sales has growth only 4% and there was such a huge growth in profit, we will say in the results section. Now coming to the comparisons of Archean Chemicals. So current ratio of Archean Chemical looks good at 2.14 and debt to equity is 0.05, which is negligible. ROC's company is good of 45% and ROE is also good at 44%. Inventory turnover ratio is little bit low for the company as compared to the peers of the company. PE is also good for the company as compared to the peers of the company. Free cash flow is also great for the company at 402 crore cash. Free cash flow for previous 5 years was at 1118 crore rupees. And the PEG ratio is 0.37, which is good as compared to the peers of the company. And the working capital days are low of the company of 49.59 days. Now coming to the quarterly results of the company. So company has reported 343 crores of revenue in the previous quarter, which was down 14% year over year as compared to the June quarter in 2022. Company's operating profit stood at 135 crores rupees and the operating profit margins were at 39% in line with the previous year. The company's profit before tax, which is PBT, was at 125 crores, but it has increased from 113 crores. So the company's revenue was down, operating profit was down, but the PBT has increased. So why this has happened? So if we see clearly here, this has happened due to drop in the interest of the company, because other income has also in the similar line and depreciation was also in the similar line. So company has reduced their debt, which helped the company in reducing their interest rate, so which was dropped by almost of 36 crore, helped in the increase of PBT by 12 crore rupees, standing at 125 crores. And the net profit of company was 94 crores in previous quarter, with an reported EPS of 7.65 rupees. Now coming to the yearly results of the company. So in financial year 23, company has reported a revenue of 441 crores with an operating profit of 634 crores and operating profit margin of 44%. Company's profit before tax were 513 crores. Here also company has paid a good amount of interest rate, which is drop in trailing 12 months. Company's net profit stood at 384 crore rupees and the EPS in rupees stands at 31 rupees per share. Now coming to the compounded growth of company has shown a good compounded sales growth at 27% and a good compounded profit growth at 47% in the longer term of 5 years. And the return of equity for 5 years of company stands at 48% and 3 years it stands for 60%, which is a very good ratio. Now coming to some of the corporate action of the company. So company has given a 2.5 rupees dividend in the previous financial years. Now coming to share capitals of company, it has increased and the reserves has increased significantly of the company from 243 crores to 1408 crores. Borrowing has gradually decreased of company from 904 crores to 69 crore rupees. So fixed asset of companies also steadily increasing of the company from 1042 crore rupees to 1097 crore rupees. Investment of company has increased as companies expanding its business from 16 crores to 215 crores. Now coming to some of the important ratios of the company. So company's debtor days are continuously decreasing from past 2 years, that is from 49 to 30 days. Company's cash convenience cycle is also decreasing from 49 days to 30 days and working capital days of company looks good at 50, which are there stabilized. ROC of company looks very good at 46% and it is increasing every year. In 2019 it stands at 3%, then 13%, then 24%, then 19%, then 39% and then 46%. So whichever company you will see which have grown in huge amount, their ROC were increasing every year gradually. Now coming to shareholding patterns of the company. So company's promoter hold nearly 53.60% of their stake in the company. FIS hold nearly 4.06% and DIS hold nearly 30.78%, which they are increasing every quarter. And there are some of the great DIS like SBI, Indian Resurgence Fund, which they have invested. We have seen in history of the company, Aditya Birla Sun Life Insurance Company, Kotak Fund, Quant Fund and Nippon Life Indian Trustee. So there are some of the good DIs that are invested in the company. And the financials, and the public holds nearly 11.55% of their holding. Now coming to conclusion, company has good fundamentals, but there was some problem in this industry due to recession. So from looking at the fundamentals, we can easily keep a target of 750 rupees for next 1 year and 1000 rupees for longer term, giving the company 12x price to earning. These are the only for educational purposes. If the stock come down, then we will see at what levels we can keep a watch on this in technical analysis video. Till then, if you like the video, please like, share and comment on this video. And if you love my analysis, then please subscribe my channel RVC Analysis. Thank you.